all of these things are telling you different, or giving you different information about the chart. There's some use to it, but with the Forex market, it's spotty. The reason why the use of MACD or stochastic or really any other indicator is spotty in the Forex market is because every Forex broker has a different price. Now this may be something that is a little hard for you to imagine if you're coming from the stock market or the futures market, but you've got to realize that in the Forex market, if you're trading with, say, interbank FX, the price that you see from your broker is going to be different than the price that another trader gets if they're trading with FXCM. That also means the chart is going to look different. The patterns are going to look different. And more importantly, the indicator down here is going to look dramatically different from one broker to the next. So making blanket statements about trading systems in the Forex, especially when they're based on these indicators, is nearly impossible because the trading system was not designed or tested on every single broker platform with every single broker price. Okay, so that's very important for you to understand when you're talking about Forex trading systems. They're just very difficult to make work because the prices are so different. What we're talking about here instead is looking at the market from a logical standpoint. Now, hopefully by now, based on the weekly wraps and some of the other videos, you know that I look at the market in terms of supply and demand. This is what makes the market move, supply and demand. Now, normally we would have at the bottom of this chart volume. So we have all these different little volume bars here. And I'll just show you very quickly. In the Forex market, you can have volume, but I will say that it's not always reliable, meaning not all of the brokers are represented, but you still can see that there is volume here. So the volume is representing supply and demand. Now to get this information, the only place that I know of right now that does have it is eSignal. eSignal is an additional fee. It's eSignal.com. The Forex market, if you get it with their charts, is going to cost you about $250 a month. So again, like I said, it is a tool that you can use. In fact, I go over the tactics of how to use volume specifically in the advanced tactics section on the website. But I also go over methods to use if you don't have volume. But suffice it to say that the key here is looking at the supply and demand. And being able to look at supply and demand in the correct way. Now, when we're looking at the chart and we're trying to gauge supply and demand, one of the ways that we do this is by looking at patterns in the marketplace. Okay? When you see a pattern like a flag starting to form, like we see here, this is, you could say, a type of bullish formation because the price is moving up. But basically, it's showing you that supply and demand are at least slightly imbalanced. Okay? What do I mean by that? Well, when you see the market moving down like this, you can see that there's a big imbalance. What do I mean by imbalance? NCE. Well, if the market is imbalanced, it simply means that there are more sell orders than there are buy orders. And because you have more sell orders, let me just clean this up here. More sellers. Because you have more sellers, the market makers are marking price down. And simply put, it's because the market maker has no incentive to make sure that you or anybody else makes money.